Boom. We are live, ladies and gentlemen. We have a very exciting guest for you today. Kulechov. Did I say that right?
Yeah, Kulechov. Yeah, that's
Okay,
correct.
good. I got it right. Founder of AAVE, originally what started as ETHLand. Stani, I'm very excited to have you on the show today. How you doing?
Very good and happy to be here, Theo. Super excited.
So let's kind of keep this simple. I'm a little bit of a layman when it comes to technology. I can understand it conceptually. Uh, it makes sense to me, but I don't get the code aspect. So let's maybe kind of rewind to 2017 when you were starting ETHLand, and let's go over kind of what you guys have built with Aave, because I think it started there, correct?
Yeah, practically, we started to experiment and build in end of 2016, and beginning of 2017 we released practically our smart contracts into the blockchain. That's where everything started, kind of.
Now, I know one of the difficult parts here is most people don't have a financial background. They don't have a background in legal or anything like that. What do you think really separates the use case of the digital contracts of lending money versus, say, the old standardized way of lending capital?
Right. So this is quite interesting topic because uh, back in the days I was practically building Web2 financial applications, and a lot of the agreements are terms and conditions and so forth. And then you have paper agreements, right? And during my kind of like a law studies, I started to go deeper into contracts and like try to understand like how we could minimize disputes and how we could make more efficient agreements. So how practically how we can make the agreements to execute better. And part of my research, I actually found smart contracts and found back then that practically they were only on Ethereum. And what I found actually is that with smart contracts and by using distributed ledger blockchain, we could actually have code that self-execute in a way that you can't change what you are basically transacting. And once we kind of realized the power here in comparing to, let's say, something that you're relying on a database, let's say you have money in a database in forms of units that basically someone can change one way or another, or uh, relying normal legal agreements for the enforceability if there's some sort of like issue with the transaction. So what I realized that actually what we're doing here, we are applying contracts like legal agreements in the very purest sense. And let's say I send value from one address to another. I cannot fail that transaction in between. But in legal agreements, let's say, if I have to give funds to you, I can still practically fail it by not giving the funds, even though we agreed in the agreement. So this was super fascinating for me, like because in one way I understood that the whole value networks that we have could actually transact this way in the future, and this made me very excited. Sorry to give this long explanation, but just like it feels weird to come from like legal side and then seeing kind of like how you could use tech in this like and blockchain this way, and then just kind of like uh, seeing envisioning how you could apply in the future in basic legal agreements as well.
Yeah, one of the abstractions about legal agreements, and maybe even you could consider the word consensus under this kind of this umbrella as well, is that when you're interpreting the legal written word, so there's no not every single lawyer would interpret something the same way. This is one of the reasons why there's kind of so much difficulty in the regulation. I mean, the original Howey test, I think, was written in the early 1900s. This is in no way relevant to kind of what's going on today. Um, do you feel that the code allows for that same level of interpretation, or is it's the strictness in the code one of the most like is the strictness in the code the most valuable aspect about how these smart contracts kind of work, as in comparison with like a regular legal counsel or the interpretation of the law?
Yeah, and kind of like if you look at smart contract, there's interpretation. It's basically transaction, the entities that confirm transactions, practically miners or however a blockchain is structured, depending on the blockchain. What's interesting there that there is all the time like code interpretation, but if you look at traditional legal agreements and the ability to interpret them, it's so wide. Like there's also consensus basically, and the consensus is all about, let's say, what we have, like what kind of legal principles we can apply, and let's say what are the what legal authority says, the court cases and so forth, and with these different opinions, and each court case is an opinion, enforceable opinion, forms this kind of like a consensus of a particular legal issue. And for example, it's easy in smart contracts to kind of like validate something like one person sends to another person funds, or let's say mathematics, 1 plus 1 is 2. But then if you have a written agreement says practically I will send you funds when the sky will be blue, and then comes the question like how blue the sky needs to be, that basically I need to send you, and I have the obligation to send you funds. And this is the kind of like like the foundation of your question, like can smart contracts basically interpret how blue sky is, and I don't know what to answer, because like now we're transacting very in a narrow manner. But once we have governance involved, for example, let's say in AAVE ecosystem and the AAVE protocol, we have this so-called safety module. That basically means that the AAVE token holders, they're staking the tokens to bear the risk of the protocol against rewards. And because of they're making risk-based decisions over the protocol, the idea is to de-risk the protocol, right? And what's interesting here is that in case there is some kind of shortfall event, for example, failed liquidation, smart contract bug or whatnot, those staked funds could be slashed to a certain extent to cover the shortfall. And now the governance actually needs to decide what is the shortfall event, and then kind of like apply it into the blockchain. So somehow you can bring those elements into the on-chain and kind of make use of it, and then you have the mathematics as well. So probably it's possible, I would say.
It's, such an interesting part of the conversation is this conceptual relationship between the human and the code and the structure, because we know we have this kind of this definable smart contract code, and then this undefinable, like how blue is the sky. I like this this example that you provided. Let's go back to 2017. You guys launched as an ICO. And even this year, I mean, to some degree, when I first heard the word DeFi, I just thought, oh, this is kind of marketing hype. Bitcoin is DeFi, like Ethereum is DeFi. These are, these are basically decentralized forms of either monetary system or contractual systems. So I thought it was all marketing hype. I actually kind of missed some of the early days of it, because I just didn't. And again, because I'm not a tech person, I'm only looking to understand conceptual stuff. It was this idea of kind of building with money Legos or these financial primitives that you started building that I was like, oh, okay, I got it. It's not just marketing hype. I mean, it's kind of sad that the word DeFi sounds like marketing hype, because it pushes a lot of people away from it. But can you explain to me, like in 2017, how you saw the opportunity here? Because I didn't see it. Things like something like Chainlink, because of the tech, it kind of went over my head. I'm like, well, I'm just going to stick with Bitcoin and Ethereum. I'll keep it simple here. Can you explain how you kind of stumbled into such a great idea in the early days of the ICO boom?
Yeah, I mean, practically our product is pretty much back in the days was the first lending protocol on chain, which practically means that as a lender, you could just deposit funds into a smart contract, and someone can borrow then against their cryptographic collateral. And that cryptographic collateral could be any token that is supported by the protocol on Ethereum, because blockchains do not talk quite seamlessly back then and even now. And what's interesting there is that you know there wasn't like an ecosystem that there is now, like there's different kinds of applications on smart contracts and so forth. Uh, but now it's different. Like now, the DeFi word is getting amplified because there's an ecosystem. It like when you explain DeFi, it's not just basically Aave. There's a bunch of other things that are using Aave or other protocols, and I guess uh, the way we are using the word, we're kind of like abusing it because end of the day, the right word is interoperability, and because of this interoperability, that all the smart contracts, a smart contract is any kind of piece of code that you deploy into the main Ethereum network or whatever the network is, and they can by default talk to each other. So you can call, one smart contract can call other smart contract function, and you can build this like bigger application from a smaller application. So in practice, it's kind of like internet. So let's say if you're building an application online, you might take resources. So application built by Google, for example, Google Analytics, you might use some of the APIs of AWS, other service providers, and now this is happening in a blockchain way. And the reason like why financial services like back then Eatland and Aave today, why they're growing so quickly is because uh, basically Bitcoin, Ethereum, and whatever you build on has been built on smart contracts have roots in financial transactions, which comes from Ethereum and Bitcoin. And if you think about it, Ethereum and Bitcoin are DeFi. They're basically the very most simple form of finance, transferring value from one address to another address. And the application is very narrow in the sense that you don't want to have too complex applications because you want to create as solid and as boring technology as you can to make it safe and secure. And this kind of like is important to distinguish when we look at, for example, Bitcoin, we look at Ethereum and what is built on smart contracts. So kind of like a DeFi existed, but why there wasn't ecosystem on Bitcoin is because Bitcoin network has been created to do one certain application to ensure practical security. And then Ethereum has been more that the transfer of value is just a side effect of what you could build in the ecosystem. So in the future, I think DeFi and financial services is going to be one big thing, but there's going to be more different kind of value things being built on blockchains.
Yeah, that's a great point. I was kind of, I've been joking with some friends lately, talking about how Bitcoin's almost boring now to some degree. It's like this tractor that does this one awesome thing for us, like plow the fields or move value and store it safely, this collateralized asset from point A to point B. Um, and I really like what not just DeFi sector, but like you're saying, the potential of Web 3.0 and what these contracts start to bring to the table, especially as we reduce costs or friction with the upgrades in Ethereum. I mean, to kind of go backwards a little bit, can you, I think I have a grasp on how Aave works, but explain it to me. Let's go over it again. Say I've got some DAI I want to put into Aave. How does this process work effectively?
Yeah, it's quite simple. End of the day. So let's say if you have stable coins like DAI, USDC, you basically you go to Aave and you probably already have a so-called Web3 wallet, which allows you to interact with the blockchain. And what you are doing is that you simply go and you approve the protocol to spend your to use your funds that you want to deposit, and then you basically call a deposit function. So it's that simple. You basically come, approve that the contracts can spend, and then you basically make the deposit. And then from that moment, you are earning. And how we do it, we have a funky way of actually distributing the interest. So when you deposit DAI into Aave, you get in return a DAI. And this a DAI in your wallet or wherever you're storing it, cold storage or whatnot, you basically the a DAI starts to every second increase in balance. So we, without any calling any function. So it's practically permissionless interest that no one can go in between and take it from you. And what's cool about this, it's actually feels like a permissionless global savings account, because no matter where you basically come from, what is kind of like a your background, you can access to this kind of like permissionless interest, and this like democratizes in the kind of like a longer vision. But it's quite simple. If you have stable coins, you simply come, deposit, and you start to earn, or you can just buy them on the market and you start to earn. And get this, if you send the A tokens to someone, it keeps increasing. So I usually try to send people like ADI, AUSDC, and basically, once they see that it keeps continuing to increase, they don't want anymore the underlying.
That's fascinating. So is there a difference between the collateral like a stable coin and a Bitcoin or Ethereum running on Aave then?
So practically, Ethereum is usually used as a collateral. So you deposit to earn small interest, but usually then when you deposit into Aave, you get a bit of credit line against your collateral, and then you can borrow. So the typical scenario is that you deposit Ether and borrow stable coins, or you could deposit, you can even deposit Link and Aave, or in case of Bitcoin, wrap Bitcoin. So basically you use some service to wrap your Bitcoin so it's compatible in the Ethereum network. So you still have your Bitcoin value, but you just wrap it to be interoperable with the Ethereum ecosystem. And then you can deposit into Aave and practically earn, or you can then borrow some stable coins. And as a new feature, we added a way actually that if you don't borrow, but you want to earn more interest, you could actually delegate your credit line to someone else. If you have a friend who's a trader who needs liquidity, you can basically delegate the credit line to them, and they can come with their address to Aave and basically borrow what they need. That's pretty cool.
Yeah, this has been such a fascinating evolution to see like a Bitcoin go into the Ethereum contract to some degree. For me, that was such a big leap forward. Who are the general borrowers, as in compared with the lenders? Like, who are most of the people that are coming to the other side of the contract, effectively?
Usually, the borrowers are there's two types of borrowers. One type is that they have a collateral. Let's say that they want to deposit. It might be, for example, Link, Ether, or wrap BTC, and they want more leverage into what they currently have. So they borrow a bit of a stable coin, and they buy practically more Bitcoin or Ethereum, and this is typical leverage situation. And then we have actually more interesting use case, which is kind of like getting liquidity without disposing your asset. And as a use case, it practically means that you come, deposit your collateral that you don't want to sell. And then what happens is that you borrow stable coins, convert them to dollars, and then spend them in real life. And practically what's interesting here is that you have your upside on the collateral. So let's say you have your BTC upside without disposing it. And if you want, you can actually swap your collateral. So you can swap between wrap ETH, wrap Bitcoin to actually the ETH is also wrap technically, and then to the ETH or to Aave tokens, Link and Wi-Fi whatnot, and you can actually change your long position completely without returning the loan, or you can close your long position completely or partially just with your collateral. So let's say if you borrowed, let's say 1,000 DAI and you have 2,000 worth of Ether in the protocol, you could basically just close with the collateral without returning the borrowed funds, and you get the rest of the funds back. And this is very important because people who actually borrow and spend in real life, they rarely have the money they have already spent the funds, so they don't have the funds to come back and actually repay the loan. So this is very good for usability, and this is just something that we recently launched and quite new in the ecosystem.
Yeah, going over this kind of how you're just explaining it, are there I mean, I can see the future of like a digital or like a credit score. Are you seeing evolutions of like the digital credit score for the borrowers or effectively kind of grow on Aave as well?
I think so. So people tend to be scared about the pseudo-anonymity of the addresses, but the thing is that address is just a bank account, kind of like if you think about it, it's just a number of it's just numbers that you practically have keys. That's the difference with the banking system. So you don't trust anyone there, but yourself, of course, the responsibility. But then why couldn't you just attach other data surrounding that address and kind of like start to create profile, or your transaction data already creates some of the profile. You could attach different handles and not do it in a goofy way that, kind of like, oh, put your Twitter handle here and now you have a credit score, but actually make it in a way that, let's say, uh, if a person comes from, let's say, UK and he wants to borrow under collateralized, how we can make it happen that we can put other properties into the address and kind of like make the under collateralized loans enforceable. And why the credit delegation function is interesting is that there could be this kind of like a mass group delegations to one particular smart contract that could be held by one entity that could draw liquidity from Aave protocol, and then that entity could be like a money lender in real life and who has borrowers, and they could, with their own credit scoring, could just lend out those funds into the traditional finance. So practically what we're doing here, we make DeFi not just one stream deposit kind of like functionality, but also kind of like a grabbing liquidity from the DeFi and putting it to work into traditional finance. And that increases the yields and also increases the adoption.
So one of the questions I had here was about collateral. A big thing that again, I was kind of slow to recognize this, but the importance of the market makers, these decentralized abilities where you can add liquidity. Now you have all these new tokens that have a liquidity pool, so there's somehow an apparent value to them. And I've seen people go to try to collateralize like NFTs for loans and stuff. What do you think about the collateralization of these more abstract, yeah, something like an NFT or some kind of an off-brand, no-name ERC20 token that has an apparent value because of the automated market maker?
Yeah, I think in the current state of how we're doing things in a permission fashion, definitely like what we think is important that there is like liquidity on the secondary markets, but then again, nothing stops creating a completely new market. And with this new market, you can set different kinds of parameters where the counterparties could, for example, accept some credit risk in that sense. So if there's an NFT as a collateral, which is valuable sold after. I mean, there might be some counterparty that is interesting, taking that collateral in case of recourse, because NFT, at end of the day, can be, I mean, it can be anything, any kind of like a representation that is non-fungible from real life, or it could be digital art. It could be something completely air, I mean, and still have value. It's just like how people subjectively think about these things.
Yeah, I think that's one of the more abstract parts about the interpretation of value. I mean, to go back to that kind of the blue sky idea, if you take something, a little bit of off topic here, but if you take something like an art piece, because it's only conceptualized as a value, like a Basquiat painting, one of the most expensive art pieces ever sold in American history for $100 million plus, it's an abstraction. It's almost a hallucination of value to some degree because one party wanted to sell it and one party wanted to buy it for this price. This is now the price of that art piece effectively. I find it fascinating to think about these types of things because in general anything outside of survival is maybe we could postulate as a type of a hallucination for it to have value versus say, oh, to like if you need water or food and, and all you have is Bitcoin or silver or gold or any type of original like collateralized asset, the survival aspect is significantly more valuable if you really need it. It's not till you get out of survival that we can have these kind of interpretations of a new type of stable or changeable value.
Yeah.
You guys have been building in this space for a long time. I wanted to ask you, what do you think the effects of such a reduced costs in gas for something like Ethereum 2.0 will bring to the table for products like Aave? Like, how big of a difference will it make to be able to operate the DeFi sector with such a reduced cost point?
I think a lot of value, of course, like, I mean, it's always in kind of like a battle of scalability and security. And I think the more scalability we have, we might have less security, but let's say not each and every transaction needs to be conferred by the whole public, let's say Ethereum main network, or in Bitcoin's case, I think in Bitcoin case, it actually provides the value added when the whole network kind of like confirms the state of the network, and you know that that's kind of like gives the security and the kind of value here, and you know it's like, if you think about it, Bitcoin network is very tight package of what in terms of software and how it's designed, and kind of like the ability not to change and expand of the offering that it is, you know. And in terms of like Ethereum, there's sort of things going on, like there's DeFi, there's NFTs, a lot of stuff going on, and that basically is a lot of demand, and it has similar logic as for example Bitcoin, where the whole network verifies those transactions, even though there is no need to do that. And I think the 2.0 brings scalability, because then you can get more transactions into the network, but also you can kind of like pick on how much like you want security in different networks. And I think layer 2 is a good example, where if you want a bit of high frequency, and you don't need like that much of like a mainnet you know, security in every transaction, you can use layer 2s and then just roll up the state into the layer 1, which practically means that you just take the state once in a while, what's happening in the layer 2, and you just push it to the layer 1 and say, hey, this is the current state of like this network, and practically that's how you maintain security periodically, and that's kind of like a fascinating. So it is important, and I think it just requires one additional application on Ethereum that practically gets people excited, and we're again jammed in the network, and that's not good, because you know the network is about accessibility, and you know and if you have to pay more gas than you're sending funds, of course, yeah, like you're not happy, right?
Yeah, that's a great point. It reminds me of CryptoKitties, just the clogged aspect of the network and the cost of making another contract because of the excitement around one particular use case, not even the scalability of what it could do if it were to go to a lot more places. Now, you've said this when we first started the conversation. We were talking about it, that you weren't going to the blockchain conference because you feel you're mostly a builder. One of the things I wanted to ask you, you guys have exploded this year. I think over like $1 billion in assets are locked up in Aave. Correct me if I'm wrong on this, but where do you see the growth and development of Aave? And is there anything else kind of at the peripheral of your vision that you see coming in terms of the building and the scalability aspect of these new financial primitives, something outside of lending, whatever it might be?
Yeah, I think now kind of like we launched the version 2, so now there's basically depositing, earning, borrowing, collateral swapping, deposit swapping. So this kind of like neat functionality, and of course flash loans. But what is interesting now for us is kind of like try to expand the market. So always protocol. So we have one market. We want to have another market where you can use, let's say, Uniswap liquidity provider shares as a collateral, borrow liquidity, token sets as a collateral, and other interesting kind of like a features. Curve liquidity provider shares as a collateral. You know, like each money market can represent different kinds of risk factor. You could have actually a money market just for wrap Bitcoin and USDC borrow, or just ETH collateral in USDC borrow. And what happens is that it basically has different kinds of interest rates, because risk goes with the reward. And this is something we're building now. But end of the day, we're quite ambitious team in the sense that we love to build and we love what we're doing. And I think we're going to keep shipping like a lot of things in the future. So this is just things that comes to my mind like very like near future and like weeks ahead. But like mid long term, like I think there's going to be a lot of exciting stuff coming up.
I want to comment on your shirt. I love your shirt. I'm going to have to get one of these. But I want to ask a question about what it's like, building during the pandemic. I know a lot of us that were interested in the decentralized world were probably already operating remote and living some type of a nomadic or decentralized lifestyle. What's it like been building with your team during these more abstract times? Like how many people are close by? How many people are in different jurisdictions in different countries? And what's that been like over the last year?
Yeah, I guess like the whole project started in a way that I didn't meet anyone face to face at least for a year or so. So kind of like there were already dozen individuals. We were working together. We didn't see each other practically physically, each part of the world, and we already kind of like started decentralized fashion. And it's just past years we set up a couple of offices, one in Switzerland and one in our headquarters in London, and probably we'll have office in US and Asia pretty soon as well. And kind of like we try to be as global as possible. Currently, there's 35 persons working at AAVE, the Genesis team, and the community itself is growing. We see tendencies, community builders contributing code. But as a team, I think for us, it's important to be like a global brand in the sense that we want to be recognized in Asia, Europe, US equally. Like that's very important to us, especially like in decentralized environment. And this is like very different kinds of ethos compared to what's been happening in terms of like fundraising, in terms of the big tech, and in kind of like technology in the past, and it used to be concentrated quite a lot into the Silicon Valley. And what's happening now is just kind of like very magical that practically you can be any part of the world and just deploy code, and you just don't deploy code when you deploy into smart contracts and the blockchain. You actually deploy a piece of history or a piece of art in the sense that it will exist there as long as the code the blockchain is active and running. So it's definitely a different kind of feeling compared to the traditional tech as well.
Yeah, so the pandemic may have actually brought some positive light to the tech sector actually being more remote. I mean, the fact that Zoom exploded so heavily when most of us were probably using it before. I'm sure you guys were using it before this all started. Um,
Yeah.
Outside of AAVE, I guess in general, what are some of the things that you've seen that have really excited you the last few months? I mean, everyone is like, "Oh, number go up. This is great." But what about the? I mean, you're a tech guy. Obviously, you can see some of this stuff coming. You might be able to see the wheel before it's even being finished, built to some degree. I feel like you might have a better view of this. What's some of the things on the horizon? Again, even if it's outside of AAVE, that kind of excites you about the potentials of the technology?
I think what's happening now is like we're seeing like the ecosystem expand quite a lot. So practically what we have been doing quite a lot in building finance in DeFi is that we look what's happening in traditional finance and kind of like copy those elements and make them more efficient and talk to each other with the interoperability. And we keep seeing more things that kind of like is difficult to do in traditional world finance, the TradFi, and that is something that excites me. But also kind of like in terms of next year, I think we will see more scaling. We see now 14, 15 billion locked in DeFi, and I think in a couple of months it will be maybe much more in upcoming months, and people don't anymore care about like how much value there's locked in the smart contract, because all the kind of like blue chip DeFi protocols will have billions, and and so it becomes like a different kinds of game, because you have these governance structures in protocols, and you have now protocols that are actually kind of like generating fees for the protocol. So let's say whenever there's a borrow in the protocol, will actually part of the interest, we have so-called reserve factor, is directed to the protocol treasury. And this practically means that over time period, the protocols will have treasuries. And this is the case of AAVE. And the treasury, of course, is in A tokens, so it compounds. But what's fascinating is that these protocols become self-sustainable. So imagine if you have like Ethereum or Bitcoin, where each part of the transaction fee goes to a DAO treasury and is governed by anyone who is holding, let's say Bitcoin or Ethereum. And it's becoming quite interesting to see like the cash flow element here, and also like how those treasuries will govern, and how we will move towards self-sustainable protocols where you don't need Stani, you don't need the AAVE team, and you don't need kind of like certain people. There's just incentives are so strong that people will come together and build together. That's interesting to see like the next 12 months.
Oh, that's a really interesting side concept. I like that. The idea of being rewarded for early participation was one of the things that I think was so exciting. I think Ethereum too kind of reignited some of that passion with the possibility to stake and be rewarded as an early participant. Can you kind of re-explain to me how the compound of the Aave token works, even if it's in a different wallet? Like I maybe missed some of this part.
Yeah. So you mean how the A tokens grow in your balance, right?
Yes.
Yes. So practically, it's super simple. So this is like so cool that like when we came to we launched this kind of like a mechanism, people can like understand what they were seeing, because when you deposit into Aave, let's say 100 DAI, you get in return 100 ADAI. So it's basically a token which gives you access to get your underlying back, the stable coins. But what happens is that these ADAI, they will just grow in your wallet. So imagine you will have wrap Bitcoin that just grows, basically Ethereum that just grows, DAI that just grows in your balance. So this is basically A tokens. So it's direct credit of the interest to your address, and that is substantially what makes things different than we've seen before. You don't need to claim your interest. It's just like it belongs to you as it's generated every second from the protocol. That's basically it.
So, and I just want to double check here. So you can send that too. So you could take a portion of your collateral, you could send it to someone else, and that portion of that collateral will grow within that contract on as you would see it in your Web 3.0 wallet, et cetera. Correct?
Yeah, exactly. So you could send to your friend, for example, and they will keep growing still. So you don't need to go back to the protocol, get your underlying. You could just send the A tokens, and they can basically convert them in Uniswap balancer, or go to the Aave protocol and convert them back to the underlying. But actually, like imagine if you think about dollar, you have a currency that actually is inflating all the time, which means that you lose value all the time. Then you have ADAI, which is practically pegged to the USD, but it increases in balance all the time. So basically, it's in like fighting against inflation, automated treasury management, and done very easy way. It saves time and kind of retains value of your assets.
Wow, that's so fascinating. Okay, so I got two more, just a few more questions here for you. Thank you again. One of the ones I wanted to ask about was this kind of flash loan idea and about the visible collateral that's on DeFi Pulse. Because I've wondered if we're able to have things like flash loans, are we looking at a higher value from things like DeFi Pulse than actually locked up because of the ability for these for that collateral to move so quickly? So it's a kind of a two-part question. One about flash loans, because I understand as a single transaction trying to do something, and then also secondarily, because of stuff like that, are we seeing a higher collateralized version of assets inside of the DeFi sector than is actually there because of that
Hmm.
that ability to move it around or something?
Yeah, so
Does that
flash
make
loans.
sense?
Yeah, totally. So basically, flash loans in very easy ways is kind of like a you're practically lending funds to someone to do a transaction, uh, and basically that transaction happens simultaneously as you give the funds. So it's quite simple scenario. So let's say I'm going to lend funds to you because you're going to buy something and sell something and return the funds back and keep the profit. And this is basically flash loans. So you can flash borrow funds from the protocol and do different kinds of arbitrage in the Ethereum protocol. So that makes kind of like the flash loans interesting. Second question is about kind of like leverage. Does the TVL's locked value grow because flash loans? I think the flash loans are used to, transact, but the actual like leverage comes when people are, just depositing, borrowing more, redepositing, and so forth. And flash loans are used to kind of make this functionality easy in that way, and kind of like without like you could do it in one transaction basically.
Okay, so my last thoughts here, and this is kind of a change in the ecosystem I noticed as DeFi started to evolve. Um, uh, when I first got here, well, that was a long before there were even markets really. I mean, there's BTCE was still up and running when I first got here, but my question right now is kind of about the the difference between the collateral and the central asset of this ecosystem. So as DeFi showed up, I noticed that we started to switch from Bitcoin being the primary asset to stable coins being more of the divisible asset. Like I noticed a relative shift from something versus Bitcoin, like as a trading pair, to that now something having more of a relevant stature versus a stable coin. Do you think that we're bringing inherent risk into this ecosystem by having stable coins, knowing that anytime we've tried to peg anything to be a one of something, that peg has broken from all of our previous experiments in layer? Like, are we injecting more risk into this ecosystem because of the stable coins and the inherent risk of the inflationary currencies that are supposedly backing them?
Yeah, I basically I could quote the I think it does have risk, and I could quote the I think it was a German finance minister who recently said that basically kind of like non-governed government governed uh, assets, or let's say like a stable coins are like in cryptocurrencies are like a and actually it was related to the Libra and Diem, that it's basically wolf in a sheep's clothes. And I would say exactly the same kind of like message to respond, that actually like it's pretty much stable coins are like a wolf in the sheep's clothes. You still have US dollar, which you want to kind of get rid of in the long term. And like the only thing that doesn't allow it to do with Bitcoin is the kind of like volatility, because it's a strong store of value. And kind of like inflation helps to ease that pain, but then you need to have also deflation. But that even doesn't help anything. I mean, it's just kind of like it takes time for a currency to stabilize. And kind of like stable coins at the current state with peg to USD, they're kind of like a temporary duct tape for the ecosystem. At the same way as USDT, as it's pretty okay. It's used. I mean, it's most trusted one, right? There's sort of interesting news about USDT. Still, people trust very much. It was a duct tape of like having USD pairs in the exchanges. So I think like the long-term solution is that like cryptocurrency might become like more like flattened, less volatile at some point, like long time from now, I think so. But you could also create stable coins that are not necessarily pegged to USD. And And I think these are coming. I know already a few projects that are building different stable coins and with interesting mechanism. And I will be eager to see like how things will roll out when they come out.
Yeah, it was such a weird one for me to see this transition of Bitcoin being our collateral to, it might be because of some of the older investors that are showing up to this sector too, who look for alpha based off of US dollar, not alpha based off their Bitcoin holdings. Whereas a lot of the ecosystem was, what's my Bitcoin portfolio? Now these new bigger funds, like we see Medallion showing up, these guys are all used to measuring alpha in US dollars, not in Bitcoin. It's been a big transition. Now, lastly, Stani, is there anything else you think we should know about upcoming? I know you said you're about to launch version 2 for AAVE, or did that already launch?
So that was launched last week, and it's already has like 50 million worth of value locked. Like we tried to do a soft launch to basically, because we already have like a big fat protocol kind of running, and it's working pretty well. And now we just want to make sure that the version 2 works pretty fine. And now that we're actually launching is governance v2, which allows the AAVE token holders not just to delegate their vote to someone to decide for them on matters, but also proposition power to someone else. And this is kind of new what we have in the ecosystem, because previously many protocols allow to delegate voting power, but our protocol, kind of like our governance, allows also to delegate the proposition power. So I might want to delegate to someone to propose certain things, but I want to keep the voting power for myself. So this brings a lot of flexibility into the DeFi governance, and this is quite fascinating.
So this kind of runs down the lines of something like Wi-Fi. Can you tell us why that governance is valuable to the ecosystem, and what it would give a participant the ability to potentially do on the AAVE platform?
Yeah, so basically the AAVE protocol is now governed by the token holders. And why it's important is that previously, if you look at finance, if you look at stuff like LIBOR, interest rates, those being decided by few persons, few bankers in a cafeteria in London, and you know, a group of people. Of course, professional people, but what decentralized governance provides is that anyone can actually join and participate, and those who don't want to actively participate can delegate their votes, delegate their proposition power, and you know, you can have a functional governance, but it's basically open, and you know, there's equal opportunity to vote on matters. So when you're creating protocols which are served for the whole world, you want the whole world to actually be able to participate, and this is like a key difference and kind of like why the protocols will succeed.
Yeah, it's a great point. I think anything to bring the World Economic Forum kind of talked about this idea in general, and I think it'll become more and more prominent, which is this idea of kind of stakeholder capitalism, that you're being rewarded for early participation, and you're actually given the features to play with the way the operating code and system works because you're a governance participator. I think it's just fascinating.
Yeah.
It also removes a bunch of legal questions about regulation, which is also you have a huge benefit to anyone building in this ecosystem because these countries have been so abstract. I guess I'm going to ask one last question before we jump off here. You're based out of Finland, correct?
Yes, exactly. Finland, it's a small country in the Nordics.
Well, you guys are big fans of saunas and hot springs, and for this, I'll
Yeah,
have to come visit one day. But my
yeah.
question here is there more clarity around this type of regulation in Finland as in comparison with some of the other countries? You know, like you know, where are you guys having an easier time operating out of Finland as you think you might if you were trying to operate, or in the other offices you have tried opening? Like, what's the regulatory conversations like?
It's kind of like speaking by the way about saunas. I was in the sauna today, so with
Perfect.
a DeFi friend. But what's interesting about Finland is Finland usually is kind of like a standby country, so they look like how other countries, European countries, regulate, and then they kind of like look what fits them well. So definitely, it's not like super first upon regulating stuff. They're very open to innovation, you know, and it's just something like uh, I don't know. I would like to see like in every place in the world more innovation. I just think we can do more, and I think we will. And this is like what DeFi is doing in general. Like it brings developers together globally. It brings people together globally, and just use the systems and build things. So I think like and like regulation is always something that's kind of like lacking the technology and innovation. And the idea of like kind of like regulation is to protect certain stakeholders. The cool thing about smart contracts is you can build in protection. You can build in, let's say, consumer protection, build in investor protection. All of these things could be built in and enforced very well. And you can build transparency, and it exists already there. So a lot of things can be solved and are solved by default of the nature of how they're built, because the whole regulation of let's say finance is based on middlemen, because you have this middlemen that you need to trust. So basically there's a kind of regulation. Now you have a system where you don't have middlemen, but basically responsibility is on the users, and how we can actually make sure that users don't screw up, and also kind of like people who build these things, that they don't build things that let the user screw up as well. So it's going to be very interesting to see like how we make a working system.
Yeah, I think it's so important to move forward with innovation, because I think we could be much farther ahead in probably many sectors than we are, just because of the lack of clear guidance on what we're able to do, or what we should be able to do. I think you guys have built a fantastic product. I'm really glad you came on the show today. Thank you for going over some of these layman questions and helping re-explain to me what's going on. I think there's a big gap right now between in any form of technology. There's such a big gap between the average person who like watches Netflix and uses Google and has no idea what's going on, as in comparison with how quickly some of this stuff is taking place,
Yep.
and the implications that it is at scale. So thank you for going over and trying to help reiterate some of this stuff. I really appreciate it. Oh, it looks like, did you freeze there for a second? We still have you?
Yeah, thanks for having me here. It was really real pleasure.
Yeah, it was great having you on as
Yeah,
well.
I'm here. I'm here. Do you hear me?
Yeah, I do now. Sorry, there was just a little bit of internet lag. No, really
Yeah.
great to have you on. I'm glad you got a sauna in for the day. That's always super important for all the Bear family. If you guys haven't checked out AAVE, go do that. We will be making a video on how to add collateral or borrow from their platform soon, because I think it's a very interesting topic. Give a thumbs up if you like this content. Leave your thoughts, your questions, your comments down below. Any of the links where you can find AAVE on their social media channels, I will have linked down in the description below. Stani, again, thank you so much for coming on the show today, and hopefully we'll get to see you again soon.
Thanks, Theo, and it was a pleasure, and thanks for having me.
My pleasure. I look forward to hopefully meeting you one day in person when all this craziness passes. We'll go for
Awesome.
a sauna.
Definitely in Finland.
Yeah, I'd love it. That sounds like a great idea. I look forward to it. Thank you, Stani. Have a great day, brother.